Let me spotlight Joe.
Okay. Hi, everyone. Welcome to another Profit Max Entrepreneurs Network monthly powwow. That's our monthly gathering. And I'm Peter Lam. And today we are very honored to have a couple of guest speakers with us from Tune Protect Group. As you may know, Tune Protect is a listed company, and they are also insurance providers with a very interesting model. But today we're not going to talk about their business model. Today we're going to tap into their knowledge base of how, as business owners, we can help reduce our risks and plan forward, and how insurance can help us in our business and why we need insurance, okay? And they're not going to do a sales job because that's not allowed, but they're going to educate us and share information and bring us more up to speed on that. So I'd like to welcome Rohit Nambiar, who is the group CEO. Hi, Rohit. And Vincent Ku. And Joe, I'll just call him Joe Zimmerman. All right, excellent. So before we start, maybe I can get the speakers to just briefly introduce themselves. So maybe we can start with Vincent, who I know is from Malacca. So tell us a bit about yourself, Vincent.
Yeah, sure. As I was introducing to Peter the other day, I have been in Malaysia for the past 50 years, so I am very much a Malaysian.
Right.
Okay. As you guys know, I'm actually from Malacca. I am in the insurance industry for now, I think about 26 years in the industry. What is interesting is that my 25 years was actually in the life insurance industry. So basically, I work for local life insurance industry and also some big conglomerates in the world. What I do is actually to run the agency channel. I actually started with training and helped to set up the training academy for a local life insurance company. And from there, I went to agency recruitment, agency branch management, agency admin, and after that, running the sales team. And coming to Tune, it's about 7 months for me now, going into general insurance industry. Very interesting. Although it's all in insurance, it's very, very different. So I'm just enjoying myself with my colleagues here, Joe and also Rohit, who gave me a lot of chances and experience to explore. So I guess I will learn a lot from you guys as well this afternoon. So that's a little bit about myself.
Okay, great. Thanks, Vincent. I'm just going clockwise. So next, Rohit, the group CEO, can you just tell us a bit about yourself?
I am Rohit. As I said in the beginning, I'm from India. Been in Malaysia for 5.5 years. Feel very Malaysian now. So
enjoying our tarik.
Yes, I've been with Tune for a year now. Before that, I was with another insurer for 17 years. I worked in 5 countries before this, 4 of which was in Asia. So yeah, excited to be here. I think today it's going to be Joe and Vincent's show. I'm going to listen to them as much as all of you.
Okay, great. Excellent. Thanks, Rohit. And then over to Joe.
Yeah, thanks, Peter. Hi, everyone. So yeah, I'm Joe. I'm in Malaysia almost 7 years now. Before that, I was in Singapore for 2 years, so almost 9 years in Asia. Coming from Germany, as I said earlier, being all the while in the general insurance industry, not having been to life insurance exposure so far, but you never know. So, and also in the insurance industry, more than 25 years already, and coming from Allianz Germany, then to AXA Germany, and then AXA in Singapore, Malaysia, and then now since more than 5 months already in Tune Protect as the Chief Underwriting Officer there.
Okay, excellent. Thanks, Joe. All right. So for members, I'd like you to key in any questions you have into the chat group, which we'll handle in a while after the session. And if you want to ask any questions of this gentleman, please go ahead, because it's not often you get to ask questions of the top management of insurance companies. Okay. All right. So maybe to start the ball rolling, to start off the session today, maybe you guys can share a bit about, in general insurance, we are very familiar with things like vehicle protection, theft, fire insurance, if your factory burns down, your warehouse burns down, what to do and all that. So I guess those are the common or popularly known kind of insurance products. But maybe you could tell us a bit more, and what are the other areas which one should consider, in terms of insurance.
yeah, maybe I start if you're okay, Vincent, and compliment, please. So I think general insurance and what you just mentioned is all about, in the first place, the assets you have, so that you really make sure that you protect your assets. So can be your machinery, can be your equipment, can be your buildings, and all these things. So that is one part. Of course, the other part is when it comes to your own health, your own protection. That means your own protection or the protection of your employees. So, and that is really the other part where you can have, of course, financial losses when it comes to health issues or accidents, so that your employees or yourself, you cannot work. So that is the other big part, I would say. One is the part where you protect your assets, and the other part is where you protect your health and your life. So, and both together, I think is very important, because it's all about protect yourself and your company and your employees for financial losses. So, and that is the part where insurance companies can offer usually the whole portfolio of, as you mentioned earlier, could be the fire insurance as a worst case insurance cover. But on the other side, also for you or your employees, can be a group personal accident or group health cover. Or if you have foreign workers, can be for your foreign workers, because there are anyway regulatory requirements for this kind of cover. So that means you always have to think from a more holistic point of view when it comes to insurance, and also when it comes to SME and commercial insurance. So that means it's really more than only the insurance for assets.
Okay, great.
Vincent,
if I can just add on to what Joe has actually mentioned, I think insurance is related to a four-letter word. And you always have to remember this four-letter word. The word is risk. I think insurance is all about risk management. So when you see there's a risk, you can either actually absorb the risk yourself. That means you become your own insurer, or you can actually pass on the risk with a little fee to someone else. And that's where insurance actually comes in. So as Joe has actually mentioned, if there is a risk that is worth protecting, either it's an asset, it's a fixed asset in a general insurance term, or it can be a human being who actually is an asset to you, or it could be an asset that probably it's not visible. It's neither human, it's neither asset, it's reputation. We can also actually insure someone's reputation. You can also insure liability, and for that matter. And even then, if you are having goods, the asset could be moving around. You have goods in transit as well, where you can actually cover for those losses in terms of goods in transit. And very interestingly, I think lately, as we grow into more and more on the internet, there were e-bankings, there were online tradings, and so on. So you will also have some risk there, especially in terms of cyber attacks as well. So, those are some new things that comes along. And I'm very sure that as we move on, there'll be more and more new and interesting things. And those days, when you're talking about insurance coverage, it could be for life insurance coverage, it could be for the whole of the life, which is actually a very long term. In general insurance coverage, basically you're talking about on an annual basis, and it's annually renewable. Today, you can also have coverage which is as and when you need it. So it can be actually a very short-term coverage also. So things have actually changed. The landscape has actually changed. So it's actually very interesting. It's a huge topic, and I think we can talk about it for many, many days. But just on a general basis, that's what we are talking about in terms of insurance and risk. Just remember the four-letter word.
Okay, very interesting. Yeah, I never thought about that. Now, how you could insure your reputation. Can you tell us a little bit more about that? It sounds very interesting. Insuring your reputation. What does that mean? Is it your trademark? Is it your goodwill, or what?
Yeah, it could be that. Or I think most likely it's actually related to some professional positions or your work. For example, you can actually have reputation risk when you are actually a doctor or you are a lawyer. In terms of your professional dealings. If let's say you have actually, because of that, causes some loss to others or even yourself, we can actually see how we can protect that for that matter.
Is that professional indemnity you're talking about?
Yes, in a way. Yeah, you are right. Yeah, that's professional indemnity they're talking about.
Okay. Yep. What about for the non-services? Would that be possible to insure your goodwill or your trademark or logo, or is that worth doing or not?
This is a yes and no answer. Probably Joe, you want to elaborate further?
Yeah,
Joe is
I mean,
an underwriter.
usually it's not very common, I would say, and I'm not aware of any cover like that, which exactly would cover that. But it's also when you mentioned earlier that the reputation can also be, for example, somebody is hacking your computer or whatever, or putting bad statements on your company or on whatever, your people or something like that. So, and your reputation is at stake or at risk. So, and then sometimes there are also legal costs involved or whatever to really make sure that you provide cover against this reputational risk. That means you really can ask lawyers to help you to rebuild your reputation, because this is usually always related to costs. So you have to invest your own money if you don't have insurance for that to build back your reputation. And that's the beauty and the beast of digitalization. You have the social media, which can be good on one hand when you have always positive comments, but on the other hand, maybe if somebody wants to attack you, it always can be a bit critical as well. So, and that can also be a reputational risk at the end.
Okay. So I guess there would be something more customized rather than a standard package, right? Okay. Yeah, so talking about social media, two things come to mind. One is things like your digital assets, no? By digital assets, I mean things like your website or whatever, you get attacked and all that, or people, like you say, post negative comments, that's one. And the other thing about digital assets I'm thinking about is things like, if you have a crypto currency or something like that, can that be insured? Or is that like, no, that's too advanced or out of reality or virtual? Or
I would say nothing is out of reality, but crypto is for the time being is not very common. But I think it's something which is coming up, which we see more and more. You know that you can pay with your points and all these things. There are a lot of these payment gateways. So, but on the other side, you really have to see where the risk comes from. And really how you tackle this first, because of course this is a kind of sometimes also digital crime when they hack something, and it can be individual, it can be your own account, your Facebook account, whatever, or it can be your account in your company. So that's where the digital cover can come in. So, and there are some companies specialized on that, but we are also working on some products for individuals, but also for SMEs. But I would say the awareness is increasing. Not so much the demand in Malaysia so far, what we see, but the awareness is increasing, because I mean, more or less every day you see there is a hacker attack or all these things. But I think it comes with the demand, so we will see more of that, and we will also see, I think, more cyber covers coming up from the insurance industry.
Okay, great.
I think, Peter, can I just chime in on that one if it's okay?
Sure.
I think we need to step back also to understand that risk management is also changing. There was a time when SMEs didn't bother about risk management. It didn't matter to them. They just ran their small business. Like it didn't matter how they kept their employees. Foreign workers, for example, by many factories were kept however they want. But growingly, regulations, governance is changing a lot. Now the new rules around foreign workers, you have to give a lot more specific services to them. And it's very difficult to attract good staff because they have opportunities as well. So even their protection is something that's very important. And many a times we notice that SMEs always look for the solution that's most convenient to them than the solution that is necessarily the best solution around. What does convenience mean? Some agent knocked on their door. Okay, that solution is the most convenient, cheapest, let's buy it. Without looking into, is that the best solution around? Best solution need not be the costliest, for the record. The other element is, I think many a times SMEs come to us saying they want cyber insurance, but they don't even have a proper antivirus package in their office. So, that's where, again, I'm not generalizing, right? I'm just giving some examples of how there's different maturity levels within SME base. And that's where we kind of have this conversation to say, I think the first step is to, have a antivirus and cyber protection before you have a cyber cover. Because if data is lost, the liabilities can be quite significant. We know SMEs or even corporates who've gone belly up because of legal cases. So I think you got to go back to fundamentally, I think, two things. One is, what protection do you need as an organization so that some event does not take you down? Second is, what protection do you need to give to your employees and your key people so that you can continue to remain a going concern, at least financially? So things like Keyman insurance, I think, is a very important policy in fact, in this space, because more often than not, when you're a larger company, you have many key people. When you are smaller, you have only one or two key people because you can't afford to have many key people.
Yep.
Even in our case, right, there are insurers much bigger than us. So if you look at them, when I worked in my past company, my talent pool was 50 people. In Tune, my talent pool is probably 20 people. So, and in an SME, it'll be even lower. So I think fundamentally it goes back to looking at elements which can keep our business going, which is very important.
Okay, great. So you covered the question I was going to ask about Keyman and insurance. That puts it in perspective. Very good. I just want to find out from you guys, because sometimes you have general insurance is general for everyone, right? But there could be certain specific needs for different industry sectors. So for example, in our community, we got a couple of guys who are in manufacturing. We got a couple of people who are in professional services, and we got some people who are doing retail and all that, and we got a couple of guys who are actually in the building, construction, property development side of things. So my question is, would there be specific products for each of these sectors, or is it like everybody should think about fire insurance? And yeah, so maybe you can give me a bit of education on that, and we can share some thoughts on that.
I think, of course, let me just start this, and I think Joe is in a better position to explain in more details. Of course, when it comes to insurance product, you always have something which is actually off the shelf, which actually, it's like, I always say, it's just like a t-shirt, so it's one size fit all. So if you fall into all the general categories and you are actually running on a budget, you just want to have some basic protection, yes, you can actually have that, and those are off-the-shelf product. And over time, the off-the-shelf product can also have certain level of customization, where normally, this type of products lets you pick, like, you can have package A plus package B and plus package C, or you can exclude yourself on certain areas and so on and so forth. But in general, I think, as we mentioned earlier on, it's all about risk management. So what's important to you? If you are actually having your assets like a factory that you actually wanted to insure, yes, fire would be a very important part. You have your machineries that you need to take care as well. If you are in agriculture, you actually wanted to look at your workers in particular, okay, and also, of course, in transportation of your agricultural goods. And if you are actually talking about professional, we have covered that. You have your professional indemnity as well. But in all these things, it can then be customized further, to actually be very specific on the things that you actually wanted to cover. And for that, I think, probably Joe, you want to add on a little bit? Yeah.
Okay.
I mean, it's exactly what you say. It's about your own assessment first. So, and how you are guided. So, because as Vincent said, it depends on in which segment you are. It can be a different cover you need, and then it should be at least a bit tailor-made. So, and it can be, even if you have a small company, it doesn't mean that you only need a small cover. So it really depends on what kind of segment you are in and what kind of advice you can get. So that's why it's also very important to do your own assessment to say, okay, what is my worst case scenario for my business? What can lead to a business interruption, which could be severe for my own business? And that can be different, again, from segment to segment. So, but this is the basic assessment you have to do. And then based on that, you will decide what kind of cover you need. So, and so it mentioned earlier, it's not always about it's getting very expensive because you add on covers. It's really the question what cover it is, and what worst case scenario you have. I mean, I can take the easiest example is, okay, you own your the building your manufacturing is in, so, and then you have assets, let's say 5 million, 10 million overall. When you have your machinery, plants, building, all this together, it's like 10 million. So, and then sometimes in the first place, an insurance might look expensive when you have to pay 3, 4, 5,000 ringgit. But keep in mind, once the worst case happens, which nobody wants, of course, your whole area burns down because of a huge fire claim, explosion, or whatever, which happens, what we saw, and we paid these claims. So the difference between 5,000, which you invest, and the 10 million, which are gone, with usually all the bank loans you have running and all these things. So imagine you don't have this insurance for the worst case. You have to come up with this money on your own. If you have this insurance, we pay, I mean, the insurance industry will pay for you. But again, it goes back to what do you really need? I would always recommend the worst case, cover the worst case first, and then see along the way what in addition you need. But of course, it also goes along with the advice you get and with the assessment you have to do. So that's why it also goes, I think we talk about maybe later that as well, who is advising you and who is really giving you the best recommendation for your individual best cover.
Yep. Yeah, I like that very much. So from a standpoint of business disruption or not being able to continue your business, right? So if your factory is burned down or damaged or whatever, or flooded or whatever, and you can't be in business for 6 weeks or 6 months or 1 year until you get reconstructed or whatever, what's the cost of that damage, right?
Exactly. So that is maybe also one of the most, I would say, recommended. I personally would always recommend, especially when the bigger your business is, don't do a pure fire insurance without a business interruption insurance, because you see, unfortunately, in Malaysia, compared to other countries, the cross-selling rate for business interruption insurance is extremely low. It's far below 10%. So that means 10% of the, less than 10% of the business owners who have a fire insurance, they don't have a business interruption insurance. That means anything happen, can be a small fire only, but it has a big impact maybe on your production. So your production line, you cannot produce. And then, as you said, 6 weeks is maybe okay, but if it comes to 6 months or 12 months out of business, we all know what that means. So, and we saw that happen so in the past, and it's really very painful for SMEs and for customers to see, oh, when it happens, of course, you don't have to cover, it's very painful. You have to cover, the insurance steps in and pays all the fixed costs and all the running costs you have. So to make sure that there's no financial loss and you can produce much faster and go back to normal. So that is the important thing.
Okay, great.
If I can just add on a little bit on what Joe has mentioned, I think lately, right, in the world and in Malaysia as well, we are always very concerned about COVID-19 and how it impacts the business. And because of this, also there are also some products in the market which covers your, which covers those scenarios where, because due to COVID, then you cannot operate your business and you have to sanitize your premises per se. So these are actually generally categorized under inconvenience-related benefits. So it may not be something like 6 weeks or 6 months. It could be something like more than 72 hours because of the SOP. You cannot actually operate your business. So how about those losses during that period of time? All this can actually be tailor-made and and actually be put in as part of the protection as well.
Sure. Yeah. For example, I used to run the ice cream business for F&N. Can you imagine if you have a power failure for 72 hours, all your ice cream melted, then you're stuck. Yeah. Okay, good. Now, I'm just related to this. I'm just wondering, do you guys have like a cheat sheet or a checklist of what are things to kind of check off or look at, or the danger signals and things like that? Do you have something like that? Like a checklist for what do you call business disruption or business discontinuity or something like that? Okay, if not, maybe that's an idea I can give to you.
No,
if you prepare something like that as a free offer, right?
No problem. We
can stick it on your website or whatever. Then people can use that and download it and leave you their contact and all that.
We can drop something later. We can send you something later also as a kind
Excellent.
of. because
Excellent.
usually that is where there is a basic checklist, as you said, but usually the people who really give the advice to the customer, they also should ask a lot of questions in order to make sure not only that the checklist boxes are ticked, but also to understand each and every SME customer, the individual situation.
Okay.
So, and we are, because we always say the best salesperson, we have the 80-20 rule. It's not the one who talks 80%, but the one who listens 80%. So that means when the salesperson asks a lot of questions, they get the right answer and they can then provide the best solution. It's not the other way around.
Yep. Okay. Very good. Excellent. I just want to shift the gears a bit. So, there in the market, there's people who buy insurance from insurance agents, and there are people who consult with insurance brokers. Can you tell us what are some of the advantages of both, or how does it work differently? So
Okay,
the advantages, if any, and the role of insurance brokers, I guess that's what I'm asking.
Yeah, sure. I think there are a few ways of purchasing insurance for that matter. You can either, actually today it's actually very convenient, you can actually go online and you can do your own self-purchase also. So from the buying process, the payment, the issuance of the policy, you can actually do it online.
Wow.
And previously, people are actually thinking that, oh, this must be very complicated. No, I think with the advancement of technology, it has been it has actually made it much simpler to actually purchase even comprehensive insurance needs. So some people, especially I think the younger generation, has been accustomed to this, and they are now actually looking for insurance coverage. Earlier on, you were talking about simple insurance coverage like motor policies. Now you can also buy health insurance online as well. So as we move on, there will be more and more simple insurance coverage for SMEs, which you can also purchase online. So that's one way of purchasing it. And the other traditional way of doing it is, of course, to get some advice from an agent. So agents, because of their experience and because of their training, they are able to actually assess the risk better and give advice on, what kind of risk should be covered and what is the sum assured should be considered, for any specific risk. Now, as people move on, I think there is also another group of advisors that came on board, which is actually the financial advisors. So you have what we call an independent financial advisor and also just a general financial advisor. In the real term, independent financial advisors should only charge fees for their services. This is like it's just like a specialist, a doctor who is actually a specialist. The doctor will prescribe, but the doctor will not sell you the medication. You will have to go to the pharmacy and get the medication. So they will just charge you on a consultation fee. So a pure IFA or independent financial advisor should actually do that. But in a Malaysian context, many of the advisors are actually just financial advisors. They are not independent. They are actually linked to a certain insurance company, and that's where they also get fee out of their services. And in most terms and circumstances, those are commissions. Yeah. So again, then you have the brokers. Okay. So brokers basically are actually helping you to get the best rate in the interest of the customers. And normally, when you have bigger risks, more complicated risks, then you will need the services of a broker, because broker will be able to represent the customers and become the negotiator with the insurers, to find the best package, to even sometimes design the package together with the insurers to provide to the needs of the customers.
Okay.
So that's the differentiation, if I can just give you on a general term. Yeah.
Okay, great, excellent. Thanks for that, Vincent. Anything to add, Joe?
No, I think it's perfectly described, because these are the key, advisors for SME insurance. And I think there might be more in future, but these are the key roles we have in the market. So, and I agree with Vincent. The more complex and the more maybe also international your business is, especially when you export outside Malaysia, or you have another manufacturing plant somewhere in Thailand or in Vietnam or wherever, and your headquarters here, then let's say sometimes the international brokers with the international network, they might be the better partner for these huge corporate risks where you have international exposure. But I would say for the local Malaysian risk, or for the smaller SME, there are a lot of agents well experienced in this segment, so that they can easily also cover that part. It really depends on your individual situation. Yeah.
Okay. All right. So I'm okay. So the last one or two questions, I'm sort of putting myself into the feet of people who are maybe looking for insurance, no? So if I'm looking for insurance and I'm kind of like scouting around, right? Not sure. What would be some questions I should ask to the insurance providers, no? Is it years of experience? Is it reputation? Is it innovation, innovative products? Is it premium price and cost and all that? So what should I be looking for as a potential buyer of insurance?
I think it goes both ways, Peter. I think, okay, let's put it this way. From the insurer's perspective, we should always do a customer fact find. So when we say customer fact find, that means you may think you need certain protection, but let's determine that the things that in your mind probably is your priority number one. But once we actually do the assessment on what is actually more important to you and what is the major risk that you should be looking at, your priority number one could change actually. Okay, so let's determine that. To first thing first, let's understand what risk that you are actually exposed to and your most immediate that you need to actually have coverage on. And of course, the second thing in everyone's mind would be, what is the sum assured am I supposed to get? And what is the price I'm supposed to pay for it? Now, that's where I think sometimes, we may go in very logically, but we came out very emotionally. Because if you really want to protect or, to determine the actual sum assured that you are supposed to get in order to protect you adequately, sometimes the cost could be much higher than you expected. So we then, as a consumer, most of the time will then compromise and say, can you give me the cheapest product? So, when you are talking about that, you have to sacrifice certain risks, to actually cover it under yourself. So I think it's a balancing act of, what is your need, what is the actual coverage that you can afford, and how can we actually go about it. So it's just like this three triangles. So we need to actually find a balance of these three areas. And I think, no worries. Probably we then establish that this is what I can afford for now. It's okay. So let's start with something first, and as we move along, let's work for other solutions, or let's work on, how can we increase it over time. I think that's the best way to approach things.
Okay, that sounds like a very sensible and practical approach. Yeah.
And that you always to keep in mind, usually you deal with an advisor, so seldom that you call, let's say, Vincent or myself directly in tune or other insurance companies. That means you need an advisor, and make sure you also can test a bit that the advisor asks enough and listen enough, as I said earlier. If the advisor, and I don't want to be too general here, but there are always different advisors. If the advisor starts to talk without asking you what you might really need, be skeptical and challenge the advisor and say, how do you know what I need? You haven't asked me any question. Maybe I explain my business first. So make sure that this is at the same eye level, communication, and not only that the so-called subject matter expert overrules your thoughts, because this is the most important thing, to understand you as a customer. So that means you really have to make sure that your advisor advise you properly and listen properly. So that is the general advice I would give on that part.
Okay. So I guess in summary, that would be like looking for someone who's professional, who knows their stuff, and who's not just a pure sales-oriented person, right? Okay, very good, excellent.
Correct.
Okay, so we have a bunch of questions, and I guess we can open up for questions. So if you guys have any questions you want to ask, you can unmute yourself or put your hand up. But let me address those questions that are already typed into the chat box first. Okay. So related to what we just discussed, there's a question here asking about what is the unique proposition, or what's the difference between Tune Protect and the other insurance players when it comes to general insurance.
Rohit, you want to take this question first? Or?
Okay, maybe we go to the easier ones first, eh?
No, we can.
We can probably just answer this. Yeah,
Sure.
from our perspective, and when Rohit is back, then he can actually add on to it.
Sure.
I think somehow when we talk about Tune and from the logo itself and from the color of the shirt I'm wearing, I think you can actually relate to our big sister company, which is actually Asia. And I think that is something that it's unique to us in terms of a unique selling proposition. Let me elaborate a little bit. I'm not selling, but I'm just saying, what is the unique selling proposition
Sure.
here. Many people would then address that AirAsia is actually a aircraft carrier, so they are actually in aviation only. That is not true, yeah. In fact, AirAsia actually, I think with the evolvement in these 2 years due to COVID-19, you have actually seen AirAsia transform itself and has actually went from just a purely airline into something else. And today you actually see AirAsia also offer AirAsia rides, AirAsia food. They are actually going into e-licensing to actually get an e-banking license. And a lot of people also don't know that actually they run an academy, and they run an e-academy. It was actually known as RedBeat, but recently we have actually changed that. So what we have been offering to our SME customers, because we see there is this opportunity to help our customer to grow together with us. So what happened is that we have been actually collaborating with RedBeat Academy to actually offer online courses free for our SME customers. Because we acknowledge that, due to COVID-19, due to all this lockdown, SMEs are having challenges. They cannot have their premises open. They are trying to go online, but they have challenges. How to set up an online business? How should they do marketing? What should they actually be worried about, and be careful about when they want to do this? And we do offer this to our SME customers. So we offer a 2 days program for our SME customers who are actually interested to learn on how they can actually benefit from all this online positioning of themselves. So this is one thing that we are offering.
Okay.
Second to that is that we
I better collaborate with you guys before you become my biggest competitor.
I think the room is still very, very big for everyone.
Yeah. Okay.
The other thing is that we have also been helping our customers, especially SMEs, when they actually wanted to sell their product, they need an online platform. Yeah, so if today they go to some other online platforms which can actually help them in promoting their products, the commission that they need to pay could be much higher. But because of the collaboration that we have with AirAsia, then we have AirAsia platform that actually helps to promote your businesses. We can help them to set up this collaboration with a much lower commission involved. So I think that's one of the very big unique selling proposition that we have for our SME customers.
Okay, great, excellent. Okay, there's another question here from Angela. She's asking what are the determinants of a business disruption insurance on the premium?
Of course, this is a very individual question. As I said, it really depends on the risk itself. But again, it's compared to the fire premium, it's really a small add-on amount only when it comes to premium. But it also depends on in which area you are in. So it's different from a restaurant to a manufacturer. It's different from a general service provider to a very complex manufacturing or agriculture plant or whatever. So that means it really depends on your individual risk. Here comes the four-letter word again. Vincent mentioned at the beginning. So, but it's really compared to the financial loss you can have due to a claim, and it's not only the fire claim which can lead to a financial loss. So always keep in mind this financial loss can really be very, very painful and can even, I saw that unfortunately also back in Germany, can even lead to bankruptcy because they didn't have a business interruption insurance. Some bigger corporates, they went bankrupt. So, and usually when it comes to smaller SMEs, maybe the financial background is different and all these things. And keep in mind, business interruption is beside the fire, the two things you should have as a worst case insurance. So that's why I cannot emphasize enough on this point. And trust me, Related to the sum insured, you will see, because your sum insured will also then be assessed, and you will see it's about your revenue and your fixed costs, and then you come up with a sum insured, and this sum insured can be in the millions, and the premium is in a few thousands only. So, and keep this relation in mind, and keep always in mind it can lead to bankruptcies, and this is the easiest way to make sure that this bankruptcy will not happen, at least not due to business interruption.
Okay, great, thanks. So I guess we should all individually consult the relative professional, because every case is different, right? Okay, thanks. Okay, there's a question here from Evelyn. She's asking, there's been an article recently claiming that insurance companies take too long to pay their claims. So she's asking, what's the acceptable period of time for claimant to get their claims?
Rohit, you want to start? Or?
I'm not sure whether the article was referring to general insurance or life insurance or both. But anyway, that's a general question anyway.
To be fair, we are all customers. We are all customers. So I'm also a customer somewhere. And of course, not with a different insurance company, but I'm also a customer somewhere. So, and I'm also very impatient when things take too long. So, and this is not only valid for the insurance industry, but especially for the insurance industry, because claim, as you know, we always say is the moment of truth. So that means the moment you really want to get your claim done, and it takes too long, which is always a very individual perspective, what is too long. But I would say if it's a very, very simple claim, so it can be a motor insurance claim, or it can be even a small fire claim, and talk about a few thousand ringgit only or whatever. So these claims, if the situation is clear and there's no big ding dong in respect of administration, documents, whatever, these claims can be done very fast, within 1 week, 2 weeks. So, but we know that these pain points are addressed. So that's why we are also working on a lot of process improvements. So to make sure that these processes are either fully automated or fast enough to really have a good customer experience when it comes to claims, because that is again where the moment of truth is coming in. So, and that is something which is really our first priority, to make sure that this customer experience is the best you can have. So that's why I agree.
Okay.
It's a pain point and it's addressed. Yeah.
Okay. It possible to give? Yeah, go ahead, Rohit. Yeah.
Peter, sorry. I think behind claims, there's a whole story. Insurance was started as a bit of a history, right? Insurance was started on a mutual concept basis 200 plus years back. And then over time, it evolved to be not a risk management, but a risk avoiding industry. And that's why it got its bad name. And I think, between the three of us, between Joe, Vincent, and me, we probably spent about 65 years in insurance. So obviously, it's a bit unfair for us, but I think we can tell about ourselves that, yes, there is a trust issue there. Trust deficit has started at few levels. One, insurers had legacy systems. So too much of paperwork. Insurers were more concerned about claims going out than about, more about profitability in a way. So what happened over a period of time is we thought complexity, adding more processes is the better way of managing, claims and underwriting. But what's happening now is technology, artificial intelligence, is actually helping us. I'll tell you very simple. Underwriting for simpler products is very rule-based. It is basically converting what's in Joe's head into a system and automating it, right? But certain complex risks, it still has a subjectivity aspect. You can never replace a human being. So that's where when technology is used, the process gets more efficient. I don't need to talk about my company, and I won't, but that's not the objective here. But like us, there are other companies where you can go on a mobile app and submit your claim. So if you download our app, you can submit your claim. Now, there is a second aspect of, so I talked about the company issue. The second is a consumer financial literacy issue. Many a times people assume that if I buy insurance, my claim will be paid. it is not as straightforward as that, because that's where your policy documents, you understanding conditions are very important. I am personally someone who promotes all channels. But when I say all channels, I think previously, I think Vincent summarized it very well. If you are a financially literate person, by all means, go and buy your own product. If you're not, it's always better to get advice, because you don't know. I can tell you many times I play this game in every company I join. I take some random contract and I ask the underwriter and the product guy and the actuary to explain this. I can tell you within 15 minutes, there's a fight breaking out between the three of them, disagreeing on a clause. That's how complex insurance is. So I think that's why sometimes when you buy complex insurance products, you need a certain level of financial literacy to be aware of what's claimed, what's covered, what's not covered. Mm-hmm. So companies have certain rules. For example, these are not rules that you would tell the market, right? For example, if it's a customer who's been with us for 2 years, generally for health claims, we wouldn't do too much of investigation. If it is below 2 years, when there's a claim, there's a few checks we will do. Is this customer someone who had a pre-existing condition and came in quietly saying nothing and now claiming? So we have to run our investigations. Now you might say, hey, sometimes, agents will also fight for their customer and say, I know my customer, very good one, very good one. And we have to, as underwriters, tell them that we actually know certain things that you may not be aware of your own customer, right? Because, for example, am I going to reveal what's inside my body to an agent? Not necessary, although we ask you to, not necessary. So that's where we have ways and means in which knowing things which the consumer may not know, the agent may not know. So I think it's very important in this conversation, financial literacy, and also consumer disclosing as much as you can. As a doctor and a lawyer says, don't tell us what we should know. The same way as an insurer also, we tell the most fundamental concept of insurance is something called utmost good faith. We are insuring you on a belief that you've revealed everything to us. So if there is something else, it gets complex. So I think there's two sides to this story. But I do believe that with new technologies, the claims cycle times are getting better and better.
Okay, thanks for that. Since you mentioned hospitalization and all that, there's a couple of questions related to COVID. I was thinking whether to ask them because I wasn't sure whether that falls into general insurance or whether it falls into life.
I can answer it. I think very simple. As an industry, you must have seen that the industry came out and said they do not cover COVID because it's considered a epidemic or a pandemic, which is a communicable disease pandemic, which is not covered in our contracts. Mm-hmm. However, some companies of late have slowly started covering COVID as things have started settling down. So I know there are 3 life insurance companies who specifically cover it. Mm-hmm. There are others who cover around it. Okay. They will give you a fund. They will cover you only if it is stage 3, stage 4, stage 5. So there's a few variations that have come. My own view is in the next 1 to 2 years, everybody will cover it because it's going to become an epidemic and not a pandemic. When it's a pandemic, insurers do not plan for it. Because I'll tell you very simple. That's why we have an exclusion. If I start now, I know for consumers, it's frustrating, right? I've had these arguments with many people. But when we price a product, we don't price it for a pandemic to happen. If we start pricing it for the next 80 years, you will be paying much more than you should be paying. But that one event that will happen 80 years from now. And if I'm the only one to price it in, there are 17 other insurers who are not pricing it in, I'm going to become uncompetitive. It's just like there are some exclusions in your contracts like riots. You would have noticed riots is a normal exclusion. Why can't I cover a riot? Probably in Malaysia, there's a riot maybe once in 40 years, I'm assuming, right? But I'm just saying, I can't cover for a riot thinking today I price in for the next 40 years when others don't, then your product for me is going to become very costly. And if in the industry we decide to price also, insurance will become less affordable for everyone. So that's why we don't cover pandemic. But having said that, death is definitely covered. life insurance death is of course covered.
Okay.
Hospitalization, they did not cover it, but of late, I think 3 insurers have started covering it. 1 or 2 insurers have put some conditions saying if it is 3, 4, and 5 category, we will cover it. My own sense, I'm not speaking for the industry, I don't belong to any association, but my own sense sitting here is 1 to 2 years or maybe even earlier, I think it'll get covered. It'll just become an endemic.
Okay, thanks, Rohit. Okay, there's another very interesting question on Keyman insurance. So Minghan is asking, what alternatives for SMEs who can't afford a Keyman insurance premium? And also, what happens if there's more than one person to cover and insure?
Okay, if I can take this question, I think in the first place, there is no such a policy that is called Keyman insurance policy. There's no such policy. Okay, it's a concept. It's just a concept, and you're using insurance to actually help materialize that concept. So what we are talking about Keyman insurance basically is just a very simple protection plan. And in the pure term is actually a whole life protection plan. So if you are really looking at a whole life protection plan, it should not be expensive. If it is really expensive, then I think that there are too many factors being built into that Keyman policies. Because sometimes we think that because a person is a Keyman, I want to cover him or her, in every walks of possibility of exposing to risk. Now the challenge most of the time is not so much on the premium to be honest. The challenge is that whether the Keyman can be insured or not. So in many cases, Keyman, basically probably are actually of a higher age range, a very important person in the company, and most of the time it comes with some health conditions, and
Yes.
that makes it very difficult to actually cover for the Keyman. Now, if that is difficult, so one of the other way of looking at it is to get a simple PA coverage. It may not work as a full Keyman insurance, but at least there is some form of protection. And yes, there are situations where there are more than one Keyman, and when there are actually more than one Keyman, it can still be arranged. But it will be a little bit more complicated. You probably have to work with a lawyer or a law firm to work out a buy-sell agreement. So that would be a little bit more complicated for today's topic. So what happened is that if let's say that, why do we need a Keyman insurance in the first place? Okay, so if something happens to the Keyman, you would actually have a business loss, right? So the proceed from the insurance would actually help you to sail through those difficult times. That's the first thing. Second thing, in order to replace a Keyman, it will also take time. So because of that also, the proceeds from the insurance will help you to sustain, while you are actually looking for a Keyman to replace. And it can also be, the proceed can also be paid to the Keyman's family members. So, it's like a full coverage in various segments of the business. So that's the pure basis of why we actually wanted to have a Keyman insurance. It's a very interesting topic. This can actually go on and on and on, because it will involve, in a true term, it will not just involve the insurance company, it may also involve lawyers, law firms to actually set up an agreement, and you can actually also involve a tax agent, to ensure that you can also get some tax relief from this whole arrangement.
Yeah.
So I hope I give a general answer on the questions. Yeah.
Yeah, very good insight there, Vincent.
Yeah.
And especially the part about involving lawyers, especially we are a couple of partners, right?
Yes,
We got
yes,
2 or 3 partners, right? Yeah, very important. Okay. The next question is from Evelyn again. She's asking, how frequently should business owners review their business risk premium?
Yeah, that's a good question. Not only the premium, you should review everything. But the premium, of course. Since I'm in Malaysia, I always learn good and cheap is the best combination.
You're right.
It's normal. So we are all price driven. We are all customers somewhere. So, but again, it's about your own, I mean, keep in mind it's about your own business. So, and it's really about, okay, you have changes, significant changes in your business, you change the production, or you widen your portfolio, whatever it is, or you build something, a new what to say, manufacturing plant, or even a smaller warehouse or whatever. Keep in mind to really make sure that your insurance covers up to date, especially when it comes to some insurance. So because I say that, because from our experience, we see, unfortunately, very often a lot of underinsurance in the market. Why is that so? It is not the fault of the customer, because usually the first thought you have in the morning is not about insurance. So we are all humans, and it's not the first thought, so to be fair. But keep in mind, whenever something at your risk, here comes the word again, or in your company changes, think about, hey, is that insured or not? Or should I talk to my agent, broker, or other partner who is giving me some advice? Could be that you have to insure it or not, but ask for advice and make sure it's covered. Because, as I said, it's very painful if you find out later when the claim happened and it's not insured. So I would say at least once a year, I would suggest minimum twice a year, you should talk to your advisor. If they don't talk to you twice a year, is already something you should challenge, because that's the minimum they should talk to you, minimum, even more. But again, I would say at least once a year when it comes to your renewal. Then, of course, you should also check your price. You should also check your cover. But as I said, the moment you have any significant changes in your work environment, or being it you hire more workers or whatever, make sure always you keep in mind, is my insurance cover okay? And if you have any doubt, immediately call your advisor. So that would be my recommendation.
Okay.
Can I just add one point? I think, Joe, you made a very important point. It's not just professionally, please do it personally as well. I can tell you so many stories where, especially, Vincent and I used to deal with this a lot when you're focusing on health insurance, where, people buy policies for their kids, saying this will cover their kids. And then they realize that, that old policy they were paying for the last 10 years, does not even cover half of a surgery anymore. Because medical inflation in Malaysia before COVID, none of you should fall off your chair, but I will tell you, it's between 14 to 15.5%. It's one of the highest in Asia, medical inflation in Malaysia. So your premiums do not go up 14, 15%. Your premium pricing in by most insurers, again, I'm speaking on an average rule. Don't tomorrow say, hey, that company didn't. On an average, companies assume 3% increase in inflation. So they plan from today saying every year price will increase by 3%, but reality is the price is increasing by 14 to 15%. So what happens by year 3, year 4, most of you get notices saying your premium has changed and it's radically changed, right? Why? Because this inflation is not covered for. The other issue is when that happens, your coverage also may not be enough because of inflation. We all heard about, 100,000. I'll give you an example. Yesterday, Vincent and I was at a dinner and we were talking about an example. 3 years back in Tune Protect, we had 5 claims for car accident, for major car accident of 1 million. Okay, those were the major claims. Last year, we had 5 claims of 5 million.
Wow.
Okay, these are obviously third party, very serious. But I'm just saying that's the inflation that's happened. I'm not saying go and buy 5 million policy. No, I'm just saying, but even before that is don't get bogged down by which is the most comprehensive policy. Buy that first policy, at least get some affordability in. 95% of medical claims is below 20,000. So at least cover that 20, 30, 40 before you think of covering that one disease that may happen, but thinking of covering that, you end up covering nothing because it becomes too expensive. So I would always say buy your first policy, then you can always top up or buy additional policies.
Okay. All right. Thanks for that, Rohit. Okay. Anyone else has got any open questions you want to ask? You can unmute yourself.
I think just to add on a little bit to what Rohit has mentioned, just on the candid side.
Sure, Vincent.
Many a times in the insurance industry, we always get questioned by people, hey, can you actually recommend the best policy? What is the best policy? Okay. So I always joke, I can recommend you what is the best policy. And let me tell you now also, the best policy is an enforced policy. So if your policy is not enforced, even though you have the best coverage, it's still a lousy policy, because that policy will not render you to be able to make any claims. So
Yeah.
it's just to echo what Rohit has actually mentioned. So get your first policy, top it up as you go on, make it more comprehensive as you go on, and probably certain policies you should drop over a period of time, because you have no need for it anymore at that juncture. Yeah. Okay. Just to add on a bit. Yeah.
Which is why what we do, for example, at Tune is you can buy a health insurance policy for as little as 600 ringgit on our website. A normal policy will probably be 1,500. So we give you a cheap product. I wouldn't say cheap, sorry, a more affordable product online, easier to buy. But as you need more complexity, more conditions, our agents can talk to you, brokers can talk to you and sell you better. That's the concept. I believe that's where the world will also go. Motor policies, my own view is more and more consumers will buy it online because they will see price is cheaper and they'll say it's highly commoditized. So why should I buy? Unless it's from a relationship angle. But products like SME, complex health, etc., you need advice. And that's where you need someone who knows it. And I only recommend one thing is, I find this very difficult in Asia is, don't choose your advisor because he's related to you or because he's your uncle, your friend, your next door person. Choose your advisor wisely, because your advisor should be here with you for the next 20, 30, 40 years. So you need a professional advising you. Why is it that when you choose a lawyer, you don't necessarily choose your uncle, brother, sister? You always look for the best one. When you choose an advisor, invariably it becomes my auntie, my uncle, my brother, my next door guy. But the next door guy may have only sold 5 policies in his life and has no clue what he's doing.
Yes.
So that is very important. Being advised by professionals is fundamentally important.
Yep. Okay. Great advice, Rohit. So with that, I'd like to draw this to a close. And before we go, I hope we normally, if this was live, we would present it to you live. But we have a little token. We call it a certificate of appreciation, just to express our gratitude for you spending this time with us and sharing your insights and your knowledge. And in the words of one of our members, in a clear, frank explanation. Yeah, so we appreciate that. So I hope Ken and Susie, are you here? Susie, I hope the certs are ready. Certificates of appreciation for 3 gentlemen here.
The certs are ready, Peter.
I can't share the screen, Peter.
Okay, hang on. Let me do that. How do I share screen? Okay, open. All right, big round of applause. Thanks a lot, Rohit.
Hey, thanks.
Thank you.
And next, Hans, Joe.
That's my long German name, yeah.
Yes.
Thanks a lot. Really, it's hard to fit it.
And Vincent. Okay.
Hey, thanks.
So thank you guys very much. Really appreciate it. No, I think we got a lot of valuable insights.
Thank you. Thanks,
Okay.
Peter, and thanks everyone.
Thank you very much for having us. Thanks for your time. It was a
All
pleasure.
right. Cheers.
Thanks. Hope you guys enjoy it also.
Yeah, thanks, and thanks for all the good advice, and I appreciate that. And yeah.
Thank
Bye.
you. Thank you so much.
Very insightful. Yeah.
If you need any advice, feel free to, Peter can provide our details.
Yes.
And you can
Yeah.
reach out to us, and we can always advise you. Yeah.
Yeah.
Thank you.
Sure.
All right. Great.
Bye.
Okay.
Thanks.